What is going on? Welcome back to the channel. So today we're going to talk to you about SoFi. Go over some of the data points, break it down on what really moved in, go over everything else you need to know. But first, make sure to just hit that thumbs up. And with that, let's get right to it. So SoFi did go down 1.69%, largely with the broader market. 24.39 the low, 25.11 the high. So during the pre-market, things looked like it wanted to kind of rebound from yesterday's horrific day, but once again another head fake. So as soon as the market did open, you had a lot of large institutions selling, which dropped it. One of the big data points from today was right over here, JOLTS numbers, which came out at 9 a.m. so shortly after the bell, but openings came in at 7.1 million, forecast of 7.3. Quits came in at 3.2, forecast of 3. So of course, not that great of data. So I think this is where the market is torn, only because in theory, we want somewhat negative data, especially labor linked data. So essentially, when it comes down to this, it being negative, it's kind of a inverse positive, only because it does further validate cuts. So now, not only for the September 17th meeting do we see a likelihood of a 25 basis point cut, but now for the October 29th, there's a 51.1% likelihood of a following 25 basis point cut. So at the end of the day, that's pretty good for the broader market. Of course, I think throughout the trading day, you had institutions taking this data for face value of it being negative and just kind of freaking out a little bit. And then again, no different than yesterday, just the psychological part of September just being very bad. I think that kind of played a little bit of a role as well today. You had a couple Fed speakers just adding some grayness. And so ultimately, given the data that's been coming out, it's going to put the Feds in a sticky situation ultimately. So it is what it is. So of course, market didn't really like that all too much. But as far as SoFi today, they did put out news right here. So SoFi launched a new ETF. And so even though essentially this might not be that popular, as well as a lot of other SoFi ETFs not being that popular, I think it's just building a brand. And over time, these ETFs will kind of build more and more popularity, which is going to bring in more revenue. So I think this is good. Is this a reason to stop what you're doing and buy SoFi? Not so much. But again, I think bigger picture, it should really bring in a lot of good revenue. And like I said, just build a fairly good brand surrounding SoFi. But aside from that though, shorts, they did return 132,000 shares today. And so of course, reading between the lines and there being a lot of available shares to short, they could have easily have doubled down. And cost to borrow is fairly cheap. So it's actually fairly cheap to short SoFi. So the fact that they didn't and that they returned shows that today's red day was largely unjustified, in my opinion. And I think just the smarter institutions out there are reading between the lines and realizing that all of this somewhat negative data is going to result in rate cuts, which is going to stimulate the market tenfold. And that's not even counting potentially another cut in October. But aside from that, 9.45% of the free floats being shorted, works out to be 111.3 million shares overall are being shorted. Looking at options, 32 million in calls, 9.1 million in puts, and then 43% of all the options being done were bullish in nature. And interestingly enough, again, you can kind of read into this a little bit more, but the last 10 minutes of the trading day, you had 2.8 million in premiums between 250 and 255, and then 1.4 million between 255 and 3, most of which were bearish. So of course, big money really doing that in the last 10 minutes of the trading day might allude to some positive push higher or expected push higher tomorrow. For data points on a side note, we do have ADP employment, and that's going to be coming out at 7:30, so another big labor linked data point. And then aside from that, ISM services coming out at 9 a.m. So potentially, maybe they're expecting some of this data to be positive to really push higher, or maybe even in line with the forecast, because JOLTS numbers, with this being negative, that laid the foundation for a cut. So even going forward, a lot of the rest of the labor linked data comes in flat, that still would be good for the broader market. So it doesn't really show a weakening, but at the same time also does and will reconfirm a cut. So maybe that's what big money is assuming. From a bull standpoint though, you do see a consensus for it to be kind of around that 26 to 26.50 by the end of this week. So despite the pullback today, you still do see a lot of optimism. Bears are anticipating for it to be sub 23.50 to 24. So a little bit more upside still anticipated. So that's something to keep in mind. These are all the transactions occurring on the secondary market above $100,000. So 7.6 million, 4.4, 1.3, 5.4. So a lot of big money still getting and looking at SoFi, which is a very positive thing. This nice string right after the market did close is helping SoFi somewhat recover. So 1.6, 1.1, 2.5, 1.05, 52 million throughout the trading day. Couple $1 million transactions and so forth. These are all the transactions occurring on the dark pool though. So similar nature, a lot of big ones. So 8.9 million, 4.4, 5.4, 3.2. So a lot of good stuff ultimately. With it closing at 24.49, it is trading between these 2 points. So this S2 and this S3. So in comparison to a lot of other growth stocks, SoFi is still holding on. A lot of other growth stocks are actually below this S3 right now. But right now, 24.54 is going to be that key point to watch for it to get over early on tomorrow, followed by 24.96. Flip side, 23.86 is going to be the next strong support. So for those of you that are day traders or swing traders, kind of just watch for that. Aside from all of that fun stuff though, looking right over here, you can kind of see good amount of flow, still a lot of algorithmic trading based on all of that. SoFi did close below that 10-day moving average, so signaling more of a consolidated trend might be coming. So don't be surprised if we do see a lot more volatility, potentially negative. But even just generally looking here, comparing it to yesterday, you're not seeing that much in large block walls for wanting to sell. Same for buyers. It looks like things have just kind of diminished. So maybe people are just taking a lot of their orders off the table for the most part, waiting for some more data to justify either to get in or sell or something else. So I think a lot of people are just taking that mentality and just gonna watch from the sidelines. Aside from that though, no new analyst ratings or anything like that. So it's just been, like I said, piggybacking off of the broader market, and which isn't all that bad. So let me know your general thoughts on SoFi. Are you buying? Are you selling? Do you think that this news that came out today about the new ETF is a good catalyst? Of course, SoFi launching this, it shows that they are somewhat self-aware of what is hot and what is not, because this AI-driven ETF is very much targeted towards what the market generally likes. It would have been better if this came out maybe, I'd say, a couple months ago, but still better late than never. So let me know your thoughts. Don't forget to hit that thumbs up. One final thing, pop over to my Patreon if you're looking for some solid buy signals on stocks, options, crypto, many of which have been absolutely on point. Worthwhile to pop over there and take a look. With all that said, appreciate all of you watching.